Fed vows unconditional inflation conflict with something it takes the Federal Reserve, clean from its biggest interest price hike in extra than 1/4 of a century, signaled on Friday that the rising danger of recession will now not prevent its conflict to carry down searing inflation that's punishing American families. The committee's commitment to restoring fee balance that's vital for maintaining a sturdy labor market is unconditional, the Fed stated in its twice-yearly monetary policy record to Congress, referring to the U.S. relevant financial institutions' rate-setting Federal Open Market Committee. "We're attacking inflation and we're going to do all that we are able to get it back off to a extra everyday level, which for us has got to be 2%, Atlanta Fed President Raphael Bostic informed American Public Media's Marketplace radio program. "We'll do anything it takes to make that appear." 3 weeks in the past, Bostic counseled against overly fast rate hikes and stated the Fed may additionally need to pause tightening in September to assess the financial system. On Friday, he said he supported this week's hefty price increase, and that policy desires to be more muscular. Inflation, measured by the Personal Consumption Expenditures Price Index, is going for walks at extra than 3 instances the Fed's 2% target. The relevant bank on Wednesday raised the range for its coverage fee by way of 75 basis factors to 1.50% 1.75% and posted forecasts displaying maximum policymakers assist lifting borrowing expenses further this 12 months to perhaps 3.4%, and better in 2023. Economists say such sharp increases should spark a recession. The file's use of the word unconditional, and Bostic's use of the anything it takes word, advise relevant bankers are inclined to chance a downturn to avoid inflation getting out of manage. "We are with the American people, and looking to make sure that the ache that is skilled, and the discomfort, is as quick-lived as possible," Bostic said. Fed Chair Jerome Powell will replace U.S. Congress individuals subsequent week at the Fed's plans to combat 40-year high inflation whilst pursuing most employment, its from time to time conflicting jobs. Critics say the Fed has acted too past due on inflation. Investors have been unnerved. On Wall Street, the benchmark S&P 500 index fell 5.79% this week, its biggest weekly drop due to the fact that March 2020. Speaking in Barcelona on Friday, St. Louis Fed President James Bullard said he believes each the Fed and the European Central Bank have massive credibility, suggesting that a smooth landing is feasible on each continent's. He said that differed from the 80s while Feds fight against high inflation underneath former Fed Chair Paul Volcker prompted recessions. The Volcker disinflation was steeply priced, however it was not credible to begin with. Volcker had to earn credibility, stated Bullard. Prudent Strategy, Minneapolis Fed President Neil Kashkari, in an essay published on the nearby bank's internet site Friday, said he supported this week's fee selection and will help another similar-sized hike in July. But he delivered the Fed must be careful. A prudent method might be, after the July assembly, to certainly keep with 50 basis point hikes till inflation is nicely on its way down to 2%, Kashkari said. Powell this week stated policymakers in July will possibly pick among a charge hike of a 1/2 factor hike or 75 basis factors again. Traders in futures tied to the Fed's coverage rate are pricing in a year-end range of 3.5% 3.75%, which equates to a mean boom of 50 basis factors at every of the year's ultimate 4 conferences. Many elements using inflation are beyond the Fed's manipulate, which include gummed-up international supply chains and Russia's invasion of Ukraine, which has boosted meals and electricity expenses. The U.S. exertions marketplace remains strong, with unemployment at 3.6%. Fed policymakers on Wednesday projected unemployment growing to 4.1% with the aid of 2024, as boom slows to 1.9% and inflation falls to 2.2%, a state of affairs Powell stated could be difficult to reap but represents a softish landing. On Friday, the New York Fed posted consequences from an economic version displaying probabilities of a tough touchdown described as 1 quarter over the following 10, where GDP shrinks by at the least 1% or about 80%. For greater on what a recession is, see Kansas City Fed President Esther George, who dissented in this week's coverage decision, said on Friday she notion a larger circulate brought to policy uncertainty as the Fed turned into also starting to cut back its large balance sheet. Still, she stated she shares the strong commitment to deliver down inflation to attain our mandate for long-run rate stability.